Hi and welcome back to 𝗕𝗘𝗪𝗧𝗏. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will stay up to date with everything that we do here at 𝗕𝗘𝗪𝗧𝗏. And if you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one, right? So following on from yesterday, we saw our fourth wave invalidate, essentially that meaning that we were not inside that 5-wave structure 1, 2, 3, 4, and 5. Okay, so we can park that idea. That one's not there, and instead it just becomes an A, B, and C structure like this. Okay, now that A, B, and C structure at the moment appears to be inside this B wave, but again, that would get invalidated if we were to top up or go up higher than the $31,000 high that we had up here. Over on the 14th of April. So at the moment we can see this structure here, and we know what would invalidate it, or what would create the invalidation of that particular structure to the downside, where we target out an approximate low of about 28,613, although it is technically possible to drop down just a fraction further to the 1.236 level, which would be 28,188. Okay, so we can be somewhere down here. But for now, we'll leave it on that 1-to-1 ratio just in there. Now, from our initial structure here, it actually looks like we're finding good support levels on the 50 EMA. Okay, so we expect a small move to the upside if we can hold this level. Lose this level, then we're probably going to have to find support on the 200 EMA, which is ever so slightly lower, around 29,800. Okay, so at the moment we're finding the 50 EMA is good support, but if we were to lose that, then we're going to look for that 200 EMA there area. At the moment, it does look like there might be a potential requirement to go down to that 200 EMA, but we don't really have a lot of momentum on our hourly stochastic RSI. So it'll be one of those. We'll keep a close eye on that, see how that kind of plays out. And for the most part, this could be an irregular flat or something to that effect at the moment. So also a running flat. No, that's not really, no, it doesn't really hit that requirement because we didn't push up higher here. So yeah, I mean, by all stretch of the imagination, we'll see how this one plays out. There's a couple of different ways that edit way theory can be applied here. We have this one, which will take us up to a slightly higher local high, meaning the B wave is not finished, or there is that alternative where the B wave does look like it's finished and it has to move down to that 200 EMA, approximately like that, and then we can move on upwards ever so slightly as well. Ultimately though, I do see that there's going to be some volatility to be experienced here. We are overbought on the 4-hour, and the 8-hour chart is progressing up quite a bit, so there's still a little bit of room to the upside here. From the stochastic RSI point of view, what that doesn't mean is that the price has to go. It just means that momentum has to kind of run out. And it does look like we're really struggling for Bitcoin momentum, indicating that there's actually lack of interest in BTC at these higher levels, which was kind of obvious if we were to think about it. Now, we did see, of course, some institutional candles coming in and pushing the price up yesterday. Okay, so on our daily chart, we can obviously acknowledge that there's a lot of fair value gaps, but if I bring this down into our hourly, and just make this a little bit clearer here, okay, we saw that there was this institutional candle coming up here. Okay, this is the one that basically liquidated all those short positions and basically just grabbed liquidity. Now we can see that there was a fair value gap right in here, okay, and it got filled. I can make this really clear by using the replay function and drawing this right in here. Okay, so this is kind of where we were up to yesterday, and we were looking at rejection around here, and we started to see this push upwards. If I just go ahead and just fast forward this, you can see that we had a red candle kind of finding resistance right up here in this upper area, and then we got this big candle coming in here, and this is where the institutional players were really coming in and just liquidating those short positions. And then of course you can see this fair value gap that appeared, and if I go ahead and just roll this through, you can see how that fair value gap gets filled out just like that, and basically price liking to come back down and clearing it out. Okay, so if I go ahead and remove that, you can then see that that fair value gap that was over here got filled, and we don't have to worry about it anymore. So institutions came in, liquidated the short positions, And then price starts to come on down, and is finding support on that 50 EMA, as we just said. At the moment, we have a strong high on our hourly chart. That is indicating to us that this is not likely to get broken. This particular high up here is something that we can say we found, we tested again, and we're testing again, ultimately getting rejected. But there is a big caveat to this. What we are doing here is new. If I draw a trend line on here, we have a high, lower high, lower high. Okay, these are interesting to me because normally we tend to find that they have a tendency to have a bit of a break to the upside, but only when you start seeing consistency in your lows. And at the moment, we do not have consistency in the lows. We have a lower low here than this one, but it's not a nice, neat channel that we'd like to normally see. So potentially testing down here and breaking down from a megaphone pattern like this could be really interesting for us as well. So again, keeping a close eye on everything that is going on with Bitcoin from a smart money concept point of view. As I said, 50 EMA support at the moment, 200 EMA happens to coincide with our equilibrium, so it has a good strong possibility that we do have to visit down here. And we have a weak low at the moment, indicating that it's possible that we do drop down lower than this low, which would then tie in with filling out these other fair value gaps that we have seen previously. So for Bitcoin at the moment, it does look like we need to be experiencing a bit of a move to the downside on our hourly chart anyway. And we can also see that we had a change of character taking us into a bearish state of play, and that has not been broken because we haven't broken these highs up here. Okay, so ultimately everything from a smart money concepts point of view is expecting us to have a move to the downside. Okay, this move to the downside will create a break of structure when it drops down lower than this local low, and that's going to confirm that the hourly chart is in a bearish state of play. So if we come back to our daily, and we can acknowledge that there's a potential turn happening on the smaller time frames, what does that mean for the daily time frame? And actually the daily time frame is holding up incredibly well at the moment. So we can see that we have corrected the stochastic RSI. I mean, there's a lack of selling pressure at the moment from this higher range, which is showing us that there's a potential appetite on the daily time frame for a continuation to the upside. However, when you take a look at the on-chain data, it doesn't give me so much confidence in thinking that Bitcoin has a lot of room to the upside. So as you can see here, we can see that there's been a significant downshift with participants from the 100 Bitcoin wallet category. There is slight movement to the upside over the last couple of days. We got the sharks doing that. Then you got the whales, which are 1,000 Bitcoin or more. They've been deviating around a little bit, and the krakens are 10,000 Bitcoin. You can see these guys really are trying to grab as much liquidity as possible. So when we take a look at the on-chain data, specifically at the larger time frame stuff, so if I would take a look at a 365-day view of whales, you can see they're not actually participating as much as you might want them to be. Likewise, when you take a look at the sharks, they were up there massively before this pump to the upside, and now this pump to the upside has occurred, they are massively coming out. So when we take a look at the on-chain data, we take a look at what's going on in the charts, and we think, okay, there's a lack of appetite of selling right up here, but that might also mean that there's going to be a little bit more of a push to the upside, more liquidity to get grabbed by the higher institutions, and then we might see that move to the downside. At some point, retail investors are going to get shaken out of this space, in my opinion. Not all of them, but a good 20 or so % of those wallets that I think have to kind of go down to zero. And the 1 Bitcoiners. So there's close to 1 million, and I would expect 20 to 30% of that reduction. So you basically see those vulnerable people taking their money back out of crypto. And I think this is going to be people who need to pay rent, pay the food, just kind of sustain their lifestyles. I think that's really what's going to happen here, and I think there's going to be many catalysts for that. It's a kind of a waiting game. I don't expect this to kind of be something that just happens to be real quick, flash in the pan, straight down here, for example, new lower lows or whatever, retail come out. I think it's going to be something that gets dragged out quite a bit. Now, on the weekly time frame, we can, of course, see that there's still these key levels, and we're right up here in this one. Now, this area is a resistance range, 28,881 to 31,848. Up here, we can see that this was an area of previous demand, and now we're coming back and finding whether or not, after losing this area, whether this is a area of supply. And so this is really the test right now. The weekly is still overbought, heavily so. The monthly is moving up from the oversold very aggressively towards overbought. So ultimately, things are not looking brilliant at the true macro levels. But the daily is looking okay at the moment, so it's holding up, and the smaller time frames are looking reasonably positive as well, but do expect some volatility down there. So we might see a push up a little bit higher. That would be interesting. Like I said, I've always wanted it to be a bull run. I don't think it's a bull run. I don't think we really have the data to support the fact that it is a bull run. But if we do push up a little bit higher, that could be fantastic for retail investors to lock in some profits before a potential downturn, which I do see on the macro level still. And the on-chain data also suggests that we have to be experiencing some kind of pull back to the downside. Let me know what your thoughts are in the comments below. I'm going to leave this one right there. If you found it useful, smash the like button. If you're new, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.